The IMN Global Indexing and ETF Conference is coming up later this month in Dana Point, California. It's an opportunity to take a closer look at the ETF industry. This year, Gregory FCA Principal Joe Anthony will be there on a panel called New and Noteworthy ETFs. Joining him for that panel is EventShare's Chief Investment Officer, Ben Phillips. He also is joining us today for a look ahead. Thanks so much, Ben, for being here.
Thanks for having me.
Well, Joe, I want to start with you. Gregory FCA has been a part of dozens of ETF product launches over the years, and your panel will touch on some of the latest and the greatest that we've seen. What will really be driving this discussion?
I think there's a lot of exciting things happening out there right now, Julie. I mean, first of all, ESG has really taken over as a prominent theme in the market, given what we've seen. More and more issuers are coming out with ESG-related products, driving the narrative behind sustainable investing, and a lot of them are even trying to reposition existing products in order to be able to get in on the narrative. Secondly, we're seeing a big change in the area of fees. This year, we saw no-fee products and negative fee products. We're really interested to see how that impacts the marketing of new ETFs.
And that no-fee and negative fee ETF really highlight the competition level in the market. So Ben, I want to go to you now. Your firm was one of the first issuers to bring a policy-driven product to market. What is your outlook for investor interest in your offering as well as others that might be hinged to the political environment we're in right now?
Yeah, I think one thing that we've learned since launching a policy-based ETF was it's still going to have the same hurdles that every other ETF has to overcome. You need a track record still, you need significant asset growth, and you also need average daily volume to be somewhat significant in order to attract those larger buyers. So I think even though it's a very interesting strategy and it's very topical in today's political environment and just policy driving markets, I think it still shows you that the ETF needs to have the right things for the buyers to step in and start using it wholeheartedly.
And your panel will also address how regulatory shifts are impacting business models for market makers. And your firm, as an upstart ETF issuer, certainly has some skin in the game with that issue. What's your take there?
Yeah, I think the fascinating thing about the ETF is it's still actually illegal under the 40 Act, right? So every issuer has gone out and gotten exemptive relief. They go get an exception from the 40 Act in order to issue ETFs. That's just a fun fact that I think a lot of people don't know. So it tells you the regulatory environment is still very far behind in the ETF industry. And the SEC, they're short commissioners, they're understaffed currently, and but there's such a need for an ETF rule. And so that's the talk. When is this ETF rule coming and what does that mean? And I think one of the big benefits of the ETF rule will allow active issuers and active managed funds to actually come out and use some of the creative structural tools that ETFs offer, such as custom creation redemption for tax deferral and things like that. So there's a lot of reasons why we need to come up with this ETF rule, and it's really in the regulators' environment currently.
Excellent. And Joe, I want to go now to you. The panel is also expected to address how new funds are being marketed. So what are some of the greatest challenges you see for product issuers?
So Julie, there's been a lot of evolution in this space. Over the last couple of years working with our clients, we're seeing that a lot of issuers, particularly the bigger ones, the 800-pound gorillas, trying to do more to control the distribution environment. So we saw BlackRock a few years ago buy Future Advisor, Invesco has GemStep, and so they bought robo-advisors as another way to increase distribution for the products. Then we got into model portfolios. What's really interesting about that, a lot of these issuers also will create their own model portfolios to help investors, i.e. the financial advisors, really figure out how to deploy the ETFs in their arsenal. Lastly, we're starting to see some of these issuers, Goldman Sachs in particular, just bought a large RIA firm, United Capital, and some are speculating that might be another oar in the water for them in terms of how they look to further their distribution. So we're seeing robo-advisors, model portfolios, and even the direct-to-retail financial advisory shops becoming part of the owned ecosystem for these product issuers.
That's a very interesting take there. And Ben, I want to go to you for the last question. What opportunities are there for independent ETF issuers in this quickly evolving landscape, and how do you position your ETF for success?
Yeah, well, I think it's still the fastest growing space in the financial markets. So you want to be there, but you have to have a product that's compelling. What we've learned is it's not, distribution is important. You want to have those multiple avenues like Joe just mentioned, but what's really important is it has to be a compelling strategy and there has to be a real market need for it. And so that's something that, we've frankly struggled with policy is helping define where it fits in a portfolio. And, our view is it's a complement to a US equity strategy, and it gives you a really diversified stream of earnings and risk return profile, because that's really what's driving it is policy. But I think for an independent issuer, if we were to give advice to somebody who's launching their first products, we'd say you want to have, substantial seed capital. We think 25 million, really, because then you're starting to clear some of the platform hurdles and other hurdles such as daily volume. If you start with a larger asset level, you're much better positioned for success in kind of shorter term versus waiting 2 years, 3 years.
Excellent. We'll leave it there. Ben, Joe, I want to thank you both for this panel preview. And if you're attending the IMN conference, you can catch these two on Thursday afternoon for this discussion. Thanks for watching. Thanks for watching. If you like this video, make sure to give it a thumbs up. Check out some of our other videos and click subscribe for more great content. Also, hit the bell for new video notifications so you never miss any of our tips and tricks.